This is how I made 2.1k trade in my Titan Capital Markets 100k evaluation, and I'm in stage 1. So come on, let's have a look. So this is the gold trade that I did take today. I took a 1 to 2, but I should have went for a 1 to 3 because that's what my confluences was. It was a 5 minute and a 1 hour, but because I wanted to get my account back up to the 100k mark because I was in a bit of drawdown, I was like, I'll just go for the 1 to 2 because if it didn't go for the 1 to 3, I would have been at like 98k or something like that. I was just like, you know what, to get it to the 100k mark, and it's based almost like I'm trading a fresh account again. And another thing as well, which happened to me today, is when I've come onto the markets, let me take this off. When I've come onto the markets, the shaded pot here, it was already shaded when I've come on. So basically now the markets are going to be opening at 12 p.m. and not 1 p.m. So when I've come on, I was thinking, yo, how come it's started already? Then I've realized, obviously, when we get to like spring, coming up the summer times, it goes back in it, time goes back, and then obviously it starts at 12 p.m. and not 1 p.m. anymore. But yeah, enough of that. So this is the trade. So when I've come onto the market, I've seen that there was this demand here. But when I've come on, I don't have the bar replay, so I can't take all of this price here away. But when I've come on anyway, up until this point here of this shaded part, there wasn't no price action. So it was just this here. There's literally just this blue candles here. It was just that. And when I've come on, I thought, oh, that is a bit high, you know. But then I was like, you know what? I'm gonna just draw the zone anyway. So when I've come on, I've seen that price was above all of these high here. This is the main high, but you got this and this and this. Obviously, this is the highest point, so this is what I'm kind of gonna be going from. So I'll get the trend line again, draw it like this, and then I would write BOS, and that stands for break of structure. And then obviously I've identified all of that now, the break of structure, the high probability demand. Then I'll go down to the 1 minute, and then I'll be looking for that exact same identical trade or zone on the 1 minute. And I see in this instance there wasn't, so this isn't a confluence between a 1 minute and a 5 minute no more. So when I've come on anyway, there was this here, this one, and I'll show you why this is a low probability as well. So for an example, this is a low probability because you got this candle here and this wick. So this wick here that's within a red, because after you got this bearish candle and then there's the big push, and you've got this candle next to the bearish one, and because that's come up and then it's wicked, and then you've got the bearish one, and then there's a wick, and then there's the push, it's going to be classed as a low probability because there's no straight gap within the setup. Some people, like when I was first starting off, I used to think that this was the gap, because you're going to be, how you looking at it, like called big push up, and then you've got this as the gap that's attached to the setup, which that's not the case. It has to be right next to this. So when you go onto this one, for an example, the 5 minute, it is attached to it. So you got this black candle, and obviously this the bullish candle next to it doesn't go above it. So if there was a wick that come up here, then this will be classed as a low probability. But because the black one is above this one here, that's where it's creating the gap. So yeah, that's why that 1 minute one is a low probability and not a high probability. Where you have identified that, and then I will go on to the 15 minute. So there's 4 time frames I go on to, is the 1 minute, the 15 minute, the 1 hour, and the 4 hour. But yeah, this is the 15 minute here. So there was a 15 minute demand zone, and the 5 minute isn't within the 15 minutes. So realistically, I'm not really bothered for this 15 minute zone here, because even if it does come back to it, I'm not going to trade it because I won't enter off the 5 minute. So I have to have a 5 minute setup that is a demand zone and a high probability to take the trade. Some people might go off this 15-minute, but I don't. So yeah, this didn't really mean much, but the only thing is that there was a gap here to where that's the only thing that could potentially cause harm. But anyway, I've gone on to the 1 hour, and then there was this demand here. But when you do look at it, it's gonna seem like it's a low probability, but it wasn't at the time. So you have this candle here. This wants to work properly. So that candle there that comes down. So when you're looking at it, it's like you've got the demand here, the zone that I've drawn, and then you've got this to where it's just like, where's the gap? But when this setup was happening, this candle wasn't here. So there was a gap in the market between here. So the gap was between here and it was just between there and necessarily where price was there in it. So that was the gap. And then it's come down, filled it in, and then obviously because I've drawn a 5-minute, that's where I would want it to be rejecting from. So, but yeah, anyway, there was that 1 hour and 5-minute. Then it's come to the zone, and then also what I look for, which didn't happen, is I will look for a change of character. And a change of character is basically this here. Not that one. Get the trend line. So how you've got this here, how price has gone up and come back down. So when you go onto the line, this is where, so basically this price has pushed up, and so basically this is making highs here, then it's coming straight down and took out this low. So this has gone from a lower high to lower low to lower high, then it's gone straight down to a lower low, lower high, lower low basically. But I will look for that to happen up here. So it's for this to kind of potentially invalidate my setup. I'd want it to come straight below this here, but it didn't. So for me, everything is still cushy with this trade. Then what I did was I waited for a reaction from the zone, which happened. Then I've entered off this break of candle, put my stop loss here. Then I've gone for a 1 to 2. But like I said, I only went for a 1 to 2 because I just wanted to get my account back at 100k and basically trade it as if it's like a new one. But it did go for 1 to 3, as you can see here. And this trade did take like basically like an hour as well, so it took quite long to get to it. So that is it. That's how I will come onto the market and I will look for my trades and whatnot, and how the different time frames that I go on to, and yeah, just how I mark everything off and how I enter and everything like that, and what my risk to rewards are. Because like I said, my risk to rewards are 1-to-1 is a 1 minute and a 5 minute, 5 minute and 15 minute is a 1 to 2, and a 5 minute and 1 hour and 4 hour is a 1 to 3. But yeah, hope you enjoyed this video. I'm gonna start doing a lot more videos like this, especially with winning trades and losing trades. But there is another thing that I do wanna show you in a whole different video, and it's things that I look out for that will make me not take a trade. So how this trade is played out, if something does happen on the 1 minute, that's what will make me not take a trade, and I'll show you like that in a whole different video. But as for now, like, comment, subscribe, and I'll see you lot in the next one.